Got a couple questions. Hopefully some of them make you think a little bit. We're just going to start off with something we start every single episode with. What is your favorite cereal?
Oh man. So I have I'm more on a health kick. I try to avoid the sugars in the cereal. So I'm pretty much eating like these boring wheat squares without any sugar. There's no flavor on it, but I mix it with 100 different. So I'll have like a kefir or a cottage cheese, and I'll mix in some whey protein and collagen and flax seeds and chia seeds and walnuts and almonds, and just mix up this very healthy. It's filling, and I put in the squares to create it'll give me a little carbohydrates, and it's not a cereal, but that is my cereal. So it sounds awful. Like, all right, I'm out of here. This guy's boring.
When you were growing up, before you started eating a little bit cleaner, what would it have been?
That's so funny. I just had this question just the other day. So I mean, I love the sugar syrup. We only ate the sugar stuff, right? So it was like,
yeah.
I mean, there was no favorite. We had the Frosted Flakes. I love chocolate. So I can't remember the name. What were the chocolate, like the chocolate Cocoa Puffs or the Rice Krispies? All of them. Like they never had good sugar. You know, I would throw a little Fruit Loops in there every now and there. Like you know, the pop things, those corn pops and. You put them all. You know, the Kellogg's pack, the whole thing, the mix pack. I would eat them all. There was nothing that I wouldn't eat there. So
just throw everything together in a big blender and take it.
Yeah, well, not together, but yeah.
The more sugar, the better. I love it. Yeah. Awesome.
No, I mean that changed a lot as I started getting growing up and started saying let's sugars and reading about it. I was very early on the health kick. I'd gotten into it towards the end of high school. And was working out and eating healthy, and people thought I was nuts. They were like, "Why are you doing this?" And then it started more. So like, it's good that people can. Health is very important, and to have longevity. Like a lot of times when we're in this space, you get very much focused on the sprints, but being successful in a career is about being in a marathon and being able to sprint and choosing when to sprint. If people continuously sprint, they will burn out. And my recommendation to anybody who's looking to build or in their own career, don't be continuously sprinting. Take some time off and enjoy the time. Life's too short. Enjoy time with family. Enjoy whatever it may be. Like get your rest, because it's a marathon. Anything you're doing, whether it's in your career, whether you're building a DeFi project, whether you're building a Wall Street, being a trader, or building a startup, it's all about being there for the long term. So just put that 2 cents in for mental. We don't talk enough about wellness and mental health in this industry, and so there's my 2 cents for putting that out there.
That's a really good point. I think a lot of people forget about, especially just in tech as a whole. People forget about that side, and it's started to become more popular, though. It is starting to. So there's definitely a plus there. Yeah. Are you more an early bird or a night owl?
Night owl. Definitely. So it was interesting. So I mean, when I used to trade, I used to have to wake up at 4:30 in the morning, and I had to be on the desk no later than 6. And between the travel and having, and I had to wear a suit and tie and stuff. So getting ready and all that was a nightmare to get there. So by the time I'm on the desk, and my boss at the time would be, if you're later than 6 a.m., you're basically taking a lap around the trading floor. So, you're an idiot. You don't want to be taking a lap around the trading floor like you're like some junior. So, yeah, I would get there at 6. So I had gone through during my Wall Street days being very much of an early bird, but then I quickly popped back into my later. I am more creative when the world is quiet and stops, and there's less stuff coming at me, because I can, I think anybody who's as an entrepreneur in the space, you get a little ADD, or you just, especially with the phones, you start seeing stuff. And so when things quiet down and friends are sleeping, family sleeping, I can then focus, and then I just get into a zone, and that zone is very hard to find. I find in the even early morning, because it seems like I want to do so many things. So at night I'm more relaxed.
I actually. That's really funny you bring that up. I was talking to my fiance about that. I was like, it is just so much easier for me to get into it when it's like 9, 10, 11 o'clock. And I'm like, okay, I can focus now. It's like everything is, it's so much more efficient. But in the morning, you got a lot of stuff to do. There's distractions. There are people that are calling you. It's definitely a lot easier for me as well.
mean, I can't help when I wake up. Okay, what are the Discord messages? Who loves me? Who hates me? What are the email messages, right? Like, oh, I got my Telegram messages. I got my email. I mean, it's just nonstop of all the different chats. I get Slack stuff coming in. So I'm like checking my 40 different my chat apps and seeing, what's going on and managing everything. And then by the time you're done, you're like, oh, it's 2.5 hours, 3 hours later. You're sitting on your back, like typing up on your phone. So yeah, I've definitely night where I find I can just all the emails are gone. There's no one bothering me, and I know I've done everything. So I can my mind is settled. So
awesome.
And my wife's asleep. So
yeah, less distractions.
Right.
It's a lot easier to focus that way for sure.
Yeah.
All right. So stocks or real estate? This might.
I'm a big proponent of real estate, but stocks are definitely something which I find to be more second nature, less friction to get in and get out. I've owned real estate. I've made money in real estate. Actually, real estate is probably where you make sometimes if you're going to hold longer term or you're consistent wins. But in stocks, I think it gives you just much more flexibility if you need to bring in some money. So, for example, if I'm starting a project or starting a new business and I need cash flow, I find having investments and liquid investments gives you that flexibility. So.
Yeah, that's a really good point. Okay, here, Bitcoin, ETH, or Polygon?
So I mean, they're all quality projects. So I own all of them. So let's put that there. You're asking me to choose, and I'm not a favorite person.
Choose one.
Yeah, you're telling me putting one on the spot here. So look, I think the technology underlying Ethereum is extremely important as the smart contract capabilities and so forth, and it has a network effects. So I don't think any technology, unless it can solve the conundrum that we have. The conundrum in smart contracts is performance versus versus true decentralization and security. If someone can figure that out, they're the next Bitcoin genius there. And so, look, I've built one of my companies around latency. So when I see what Solana does, I'm like, oh, I probably should have built that company. That's not, that business. I mean, even though it gets so much hell, especially lately with the hacks and so forth. But I mean, that low latency performance is very, very important, especially when you start, when you have people from the TradFi space trying to come into this space, they know what the importance of performance and low latency. Mm-hmm. I mean, I've built businesses around latency. I know that's important. So, I get frustrated when I'm paying the gas fees in Ethereum. We're not building an Ethereum because of the cost. I mean, we didn't want to. We wanted to be community first project, and we said, could we be community first if we're asking people, especially when we're starting out, to pay $40, $50, $100 per transaction? Yeah. It just doesn't feel right. So we do plan to be on Ethereum, and I think it's a very important chain. I think if you ignore Ethereum, it's just like saying you're ignoring the number one play, where the network effects and so forth. So I think that would be a mistake. So that my view is no question Ethereum has the network effects. It has the strength. It is the Facebook of our time. It could become realistic. It could become the MySpace of our time, where something comes better, which no one at the time. I was actually, I didn't use MySpace at all, but I used Facebook or whatever. But when Facebook came about, obviously it became much better, and it was using real people's identity and so forth. So people just liked it and or appealing, found that more appealing. So from my perspective, unless someone can break the Ethereum network effect and solve the performance and gas fees, it will always be the lead. And so I believe that will be the main driver which people will build on long term. But these side chains aren't going anywhere, especially like Avalanche, Polygon, and some of these kinds. There is going to be an issue where there's too many L1s. I actually believe the next generation of innovation in this space is not on the L1 space. Even we've seen Aptos and some of these others, they keep coming up. VCs will keep funding it, just like they kept funding social networks, just like they kept funding search engines, even though well after Google was there, they always want to try to replicate it. It's going to keep happening. Yet when there's a winner, there's a winner. Google had network effects. Facebook had network effects. Uber had network effects. So from my perspective, the opportunity now is to pick the winning platforms and build on top of it, and build the next layer of software on top of it. And that's what Collectiverse is doing. We're building a middleware on top of what we view as the winning layers. And if you read our white paper, we talk about, we highlight three in the beginning: Avalanche, Ethereum, and Polygon. We just think those are the three main ones right now. And then, Phantom and these others will be also potentially there to be very viable. But you have to look where the people are and where the network effects are. Long answer. Sorry, but I think that's an important answer or important question for this space. More from not from my own personal views perspective, but more from what I see as more fundamental of the space.
Yeah, for sure. And kind of going on that, next question would be: do you prefer either high speed or with a high gas, or low speed with low gas?
Wait, high speed with high speed with high gas, low speed with low gas. I mean, look, whenever you put a transaction on, nobody likes to wait and sit there and say, did it go through? Did it go through? Did it go through? Like, we've all been there. Like, is that gone through? Like, we get like that, you get that little heart palpitations, like, oh, where's my money? Okay, like, when your money's out of one thing and is not in the other place, and you're like, what's going on, right? So that's always sucks. That's what I was saying. If the project, and so I guess, to me, obviously, with these L2s that are building on top of Ethereum, that will solve some of that there. So look, we all of us, transactional costs. And sorry about doing this. I'm going to take much more fundamental. But transactional costs, and I came from finance. I studied finance at University of Chicago, Booth School of Business. So I'm going to come here from a more theoretical standpoint. Transactional costs will kill your returns every single day. So no matter how good of a trader you are, if you're paying high transactional costs, you'll always do worse than the person who's paying low transactional costs. It's just a matter of fact. And that's actually, again, going back to a company I built. We had built low latency systems, and I went in, and I'm starting to jump the gun here, but I basically, when I would go into the head of, the guy who runs CTO of Goldman Sachs or Merrill Lynch, and they laughed at me, like, why would we take your software and put it in our company? And I go, well, what if I go to your next partner and they trade 2 seconds faster than you, or they can have that much less friction than you in latency? They were like, oh shit, you're right. We got to get this, because if they're better that much faster, we're going to lose every single trade. They're going to always win. So when as a trader, as an investor, you always want to try to reduce your friction, because as much as great as we all think we are in this space as a trader, or usually you're losing more than you're winning. But as long as you can hold on to those longs enough, if you have those multiples that are going 5, 6, 7, 8, 10x, and you can sell your shorts, that means you can lose 8 trades to make that 7, 8x or whatever that is to break even. So the idea here is that you want to reduce your transaction costs all the time, and you also want to learn how to cut your losses. Those are the two things that I think, from a trading perspective, is always a good approach to making money.
Awesome. Yeah, I really like that. I know you have a lot of trading knowledge to depart on everybody. But kind of taking a step away from that real quick. Last question: if you're stranded on an island, what team members with you?
What team members with me?
Yep.
You mean on my current team?
Yep.
Oh, that's my dog. All right, I'm not choosing that one. I'm pleading the fifth. So,
okay, fair enough.
A damn good metaverse builder, because I want to be. I don't want to be sitting on that island looking at them the whole time.
Perfect.
There you go.
All right.
No.
So let's get into it. Let's get into a brief introduction of you and who you are before, like your kind of whole journey into what you're doing now.
Yeah. So I sort of touched on this. If I want to go back, I started and I got into finance, and that was actually kind of by accident. I had an interest, actually, you mentioned real estate. I had an interest in very early. I got my real estate license when I was 18 years old. I was fascinated by it. I got involved in a brokerage when I was basically 18, and I'd sold my first house at that time. So I thought real estate was my place to be. I took a hiatus, and I started a little student painting business in college, where I grossed over 100,000. I personally took home 50,000 in 3 months of work, which was pretty cool. I made money, and I was able to buy stuff and didn't have to rely on the parents as much for asking for money and stuff, which was good. And then I basically thought I came out and planned to go to, go focus on real estate. I come from a more very traditional family where they felt like being in real estate and it's not professional enough. You have to, they're all coming from doctors and what they would call professions, and they were like, if you're not going to be a doctor, you got to be professional. And what does that mean? They're like, well, you have to get your graduate degree. So I went and I applied a few schools, all the top schools, and I figured I probably wouldn't get in. I'm coming out of college, and I got into one of them, University of Chicago Booth School of Business. It was actually ranked #1 at the time. I don't know how I did it. I'm like, all right, I guess my experience is running these painting business and real estate, so they thought this guy might know something. So I came out. It was school again. I was like, all right, here I am again. But then it was good. I learned a lot from the finance side, which I hadn't learned in college. I was at UVA, University of Virginia, at college, and then I did a summer internship in the real estate and investment banking space, and I hated it. I couldn't believe people actually do this. I asked to try the trading floor as something different, and they sent me to like the mortgage derivatives desk, and I loved it. I was like, holy shit, this is great. Like, this is me. Like, I felt it. So then I had such a hard time actually getting these internships in the banking world. They're like, you're not one of us. And I realized I'm not. And then on the trading side, the next year, I was just like, I had like 15 offers from all the best firms, all my choice. And it felt good to be like, you fit. And so I picked I went to at the time Merrill Lynch at the time, which was later acquired by Bank of America during the Lehman crisis in 2008. But yeah, so then I was trading derivatives and structuring derivatives. I got the chance to work out of Hong Kong, Singapore, where I traded FX. I got to spend some time in Australia, in Sydney, where I traded Aussie bonds. Hong Kong, I structured some interest rate derivatives for like Vietnam and for the countries themselves. So they were these, they were trying to hedge out some risk, or the companies in those things. So I got some great exposure there. I was in London, and so it was a really good opportunity with Merrill Lynch. And then I got a great offer at Credit Suisse to be a senior on their mortgage derivatives desk. I traded that for a while. I did some really very interesting stuff where I did a lot of financial engineering on mortgages. And anybody understand mortgages, that kind of model, which I sort of talked in my last episode or last AMA, where mortgages represents a really good model for financial engineering, where you take something that's out there in the real world and you carve it up into different types of risk assets and so forth. So we were doing that. I got then pulled into the interest rate derivatives desk to trade. So I thought that was a great opportunity. I worked there, and then I sort of started getting involved in more structured products. So I did. That's when I was starting to do a lot of synthetic securities, and building things that just didn't exist before. And I was sort of like able to be sort of the brainchild of some really cool hedging, and companies would come to us and say, how do I build this this risk profile I'm trying to get, or how do I hedge this risk, or how do I take advantage of this thing? So I was able to work with some of the top hedge funds and firms out there. And then at some point, this was more of an ego thing. I made so much money for the firm one year with minimal risk, and I didn't feel like I got paid enough. And this is a Wall Street ego thing, where you feel like if you're not paying this ridiculous paycheck, which looking back at it was a ridiculous paycheck for a 25-year-old, 24-year-old. I was like, 20, it's a little bit older, 27. So I was like, I'm out of here. I mean, I'm going. And I told all my friends and on the trading floor, I'm out. And they're like, there's no effing way you're leaving. You're like going to be one of the stars. You're going to be an MD here in 3 years. Stay. You're not going. I'm not. You're just talking. You're just frustrated. Get out of here and go. See you tomorrow. Well, I'm leaving. And the guy's like, basically, they created a pool. They just started writing checks, and they're like, "Here's $50,000. Here's 20. If you're leaving, I'm writing a check for your business, and let's see if you." I basically had, from my trading guys and the MD, they had $2 million in literally checks sitting on my thing, and they were like, "You started doing this, that's yours." And I literally said, "Okay, I'm going to start this business." You didn't believe me, so it was the most easiest capital raise ever. I just said I'm leaving. They're all like, "No way, check. I don't believe you." And I cashed it in. They were like, "What the hell? You took our money." So I'd raised angel seed, and I started my first business, and it was the hardest thing I'd ever done. It was so Humbling. I thought I was a rock star from trading. I thought I knew it all. I thought I was like, you're cocky as a trader and structure. And I was like, and building a business is completely different skills. Managing, I sucked at it. When you're in trading floor and you're managing, you're like, hey, get me my fucking coffee, right? You're like yelling the door, like, here, you're telling someone to get their fucking coffee. They're like, fuck you. Like, I'm out of here. What's doing, right? So, and again, I apologize if I'm cursing here to anybody. I don't know if this is a
No,
PG.
you're good. You're good. You're
So,
totally good.
yeah, so I had taken a hard knocks in terms of building. It was one of the hardest things I'd ever done. It was my real MBA, I call it, where I just struggled and then I finally figured out. I mean, the approach we had was right. I just didn't know how to do it. I mean, I didn't know how to build software. I never built software. I mean, I built software on the trading floor, but it was a lot different when you had 20 of the top quants and engineers to build it. Now I'm having a couple guys and I'm trying to do it in a reasonable way, and I had no idea how to do it from being a product architect to driving it to testing. I mean, all the stuff that goes in building products, you just don't realize how hard it is. And so I ended up figuring it out. I ended up bringing in someone who could, I had to fire a couple people and then bringing in the right CTO, and we ended up having an exit. It was a modest exit, but it was good. And then I ended up starting a company based on the customers that I'd spoken to all the time, because we were targeting Wallstreet. And what I was building was middleware. Same thing I was doing in this space was making applications to build, in this case, easier for Wallstreet. And at the time, as browser applications were becoming, didn't exist at the time. People were building all these custom Java applets, and it was a very expensive, tedious. If one thing changed, they'd have to change them all. It was a very expensive process. So I created a platform for real-time applications that were running through a middleware, which all was running in a central server, and so that they could all build these applications on that central server. So it was a good product. It was just hard to build. And then I got bought out, and then the customers of JP Morgan and Goldman said, look, we love what you're doing. We thought you were going to go and replace this other very big middleware company called TIBCO, it's a multi-billion-dollar company. We wanted you to come and drive it. And I'm like, well, I didn't think I could get there. And I had some things that like, look, we'll help you go build the next one. So that's what we did. I mean, I literally had hand-holding with you all the time. I mean, when you say you're an entrepreneur, you need the help. So from there, I had these customers who were like, we love this product and so forth, and we'll work with them. But then I also had a lot of resistance too, as I sort of was talking to when I started, going through the path. But, I somehow at that time, I again raised a $2 million check. And then we got someone then introduced us to Goldman. And Goldman, first of all, their technology people kicked us out first. Initially, when I say there's one person that came in, there are other technology people kicked us out and said we're not going to deploy this because we're going to build our own or whatever. And then the funding side, the capital market side came and our investing side, and they're like, we want to invest in you. And they're like, they gave us like immediately like a huge valuation of $30 million, which is we're very young at the time. And they were like, put this money in, and we'll make sure that Goldman is closed. And they did. They signed, sealed, delivered on that contract. And so Goldman was our biggest customer and our biggest product. And we had a number of the banks, we had a number of the exchanges, hedge funds. We were working with D.E. Shaw and all the big funds that we sort of read about and on the papers. They were our customers, our beta customers, and so forth. So it was a great experience. We had to raise a lot of money for this because, and actually raising money is it's not a success factor. Just so you know, like when people talk about I raised this much money, I actually rather raise less money and be more successful than raise money. Raising money is not a milestone that I ever look at and say, hey, I raised money now, because I did it, and it doesn't mean anything. It's a vanity metric. If you are growing, if you're building fast enough, then raising money is great. But it's even better if you can grow where you don't need to raise money. That's the beautiful thing. And so that circling back to even Collectiverse here, like I have the opportunity to go and raise venture money today. To be honest, it'd be much easier than trying to do it through this community stuff. I mean, I can call like a few calls and say, look, I built middleware. I've sold one to publicly traded box. I sold this, and now I want to create middleware for the DeFi space. They're gonna invest. I mean, look, you're gonna invest. It's first a hot space. We have a real substantive product. We're going to find someone who's going to say, yes, we're putting money in. But I want to take the approach of first starting with the community. I don't want this to be an funding and a product where either in two ways: either that the VCs win first, or that the VCs hurt the community. That's the two things I'm trying to avoid. And so it's a challenge. Like, I mean, obviously with the bear market and stuff, people are scared and are investing less. So, you know, my hope and goal is through all these, spending time on a Saturday and talking with you guys and so forth. It's like, I understand the market sucks and you're sometimes you don't want to invest and so forth, but there's sometimes where you have to just look at, and go through it and say, is this something special? And if it is, put a few bucks in there and take a chance on it, because you might wish that you didn't at the time, because it was something special. So, I am bringing, I think, some insights from fintech, from Wallstreet days that I think most founders don't have. I think we're taking also the lead of what some successful protocols have done in this space. I mentioned Horde last time. Sphere Finance has done, where they built very core DeFi as a service products that are, these protocols are worth a lot of money now, and hopefully they continue. And I believe Collectiverse is in that same vein. And again, because we're not trying to just build a token for the sake of earning yield, we're trying to build a technology platform for the sake of changing the landscape for the better. And it's just whether our bet's the right one or not.
Yeah, I really love the piece that when you were talking about changing from trading into running a business, and that whole lesson, that you had to go through. There's a huge curve. You're changing your whole career path there, because running a business is a completely different ball game. I really like how you pointed that out and all the lessons that you had to learn over time.
Yeah, I mean, it's hard. It's hard. I mean, anytime you're making a career change, it's hard. But I don't know if there's anybody here that's an entrepreneur here. But let me just say, everything you think is the right way to go is wrong. It's the same way, and it's similar to trading. It's similar to trading, but it's different. So I thought, eventually my trading skills and my being a trader helped me with this to break it faster. But because I was able to learn that, like in trading, a lot of times you're like, oh, I made money, I'm gonna sell and take my gains, and then you're in natural psychology, like, oh, I'm losing money on this, I'll wait till it breaks even and then I'll sell. That's just your natural human. That's how we are. That's how we're instinctually created. So you have to break that thinking and not just know it. You have to act on it. In entrepreneurship, there's a lot of fundamental issues that most entrepreneurs make. They try to perfect their product too much, which I try to do, where you don't want to release it to the public until you believe it's perfect. As Reed Hastings, who was the founder of LinkedIn, says, if you don't release your product where people say it's shit, then you release it too late. You want to make sure that the product sucks, and you want to get that feedback early, because no product will last customer a touch point, and the customers will always say, great, but that's not what I wanted exactly. You have to iterate a little. You're going to have to. It's never going to be perfect that comes out of your head. The other thing is to build too much. Everyone talks about all their features and, hey, I got this feature, this feature, this feature. The core is to build your minimal viable product and really core it down. What is the core thing that you're building that solves a problem, and deliver on that. And then really be very customer centric and focus on what is solving the problem. Like, stay core to what the problem you're solving is and what the market needs, not what's in your head and your ego to do something. So, if you recall in our last AMA, I kept talking about what are the two problems we're trying to solve, right? Help projects deliver in more efficiently and less cost, and help keep investors secure and safe at the same time. Those are the two. If those are in front of us at the end, we will always find a way to get on the right track, as opposed to being like, I know the right idea. I'm brilliant. I'm going to make this work. And every entrepreneur wants to be Steve Jobs and sit up there and says, look, this is my project and this is my phone and this is how it works, right?
Yeah.
Oh, you saw my messages, yeah. But just so you know, Steve Jobs didn't want to build a phone. He thought it was the dumbest idea ever. Steve Jobs didn't want to build the App Store. It was the key to making the phone a platform, which would never existed before. So Steve Jobs, everyone wants to be Steve Jobs, but he was completely wrong on some really core fundamental things that made him successful and made him iconic. And the same thing on the computer front. Like, I mean, he did have some very smart ideas around using the Windows OS and applying it to the Mac, which was genius at the time, but he didn't build it. He saw it at Xerox and he's like, we need that. So as much as we think an entrepreneur like Steve Jobs is doing it, he's also gets a lot of help. So as an entrepreneur, you have to be more open. You have to be more open in terms of how to go forward, and realize you can always get it right.
Yeah, I think that's one of the pieces that perfectionism is one of the pieces that I've definitely been like, okay, I got to dial back on this a little bit, just try and get it out and get that look. It's definitely something that I've been trying to find that balance between on how, how perfect you want to make it or how good you want to make it before just getting it out there and then, getting some results back or getting some input back. Yeah. What do you think is the biggest initial kind of the initial bottleneck going from trading into business?
It's a lack of first of all, you lack management skills in trading. On Wall Street, they don't teach you management skills. You don't have good mentors. Like I told you, like my mentors would be like yelling at you to do something, not to motivate you, not to understand your needs. It's more about what they need, right? But you learn that world, and it's a dog eat dog world, and look, the culture on Wall Street is not in any way a one to emanate to emulate in any way, but it works, and you can't sit there and say they have there's a lot of pressure. It's fun. I mean, like and by the way, I will say one thing. Everyone, as glamorous as Wall Street sometimes looks from the outside, being in it, there were so many boring days where I was like, this is the most boring job ever. Like literally the markets wouldn't move and you're just sitting there. What do I do? Like nothing is happening. And you have to sit in their desk just in case a customer calls. And you're literally sitting there and like, what do you do? So Wall Street, every industry from the outside, I've always known it looks glamorous. I lived in New York. I dated a fashion model, and I saw how it really worked. And I'm like, this is the worst industry ever. But you look on the outside, like, oh man, you're like going to all the best parties. You look beautiful, whatever. And I'm like, I would never want to be in that. And I felt so bad for like what these models go for. So like, I've experienced like entrepreneurship, Wall Street, and like in the creative fashion industry and so forth. And no matter what industry you're in, it's never as glamorous on the other side. So sorry, answering your question, going from trading is that you're not having the skill set first to build a business. But at the same time, especially in a field like DeFi and so forth, you can bring a lot of insights that don't exist in an entrepreneur who doesn't have the finance background. So it depends on what vertical you're targeting. So I want to qualify that. In this case, where you're building software and so forth, the cycle to build it's hard, and then the decisions to when to iterate. I mean, part of building products successfully is iterating very fast. You have to iterate very fast. You have to go lean as much as you can. You have to, like I said, get customer feedback as quickly as you can, whether it's the prototypes or so. You just have to learn sooner than later. Otherwise, you get stuck in your own little vacuum where you just think you're hearing yourself. And I have my wife's part of a startup, and I sometimes hear they've been talking about getting a product out for 6 or 7 months. They can't even get the website done, right? They can't even get a website done. I'm like, just put it out there and see what people think. And they keep discussing it for months and months and months to try to perfect it. I'm like, you're not going to do it that way. So I think a lot of entrepreneurs, especially CEOs, there's two things. One is to be an entrepreneur, and the other thing is to be CEO. When you're CEO, a lot of people can be an entrepreneur but not be CEO. When you're CEO and you have to make a decision, people think you have to know the answer. And a lot of times I will always say, I have no idea what the right answer is, but let's take this decision. Because if you're stuck between having to go left or right and you don't know, the idea is not to wait until you know which way to go, left or right. It might be too late. The idea is to go left and then quickly learn that left is wrong and go right. Not to do it. And that's what I was trying to say. We, by nature, want to wait before we pick going left and right. But then it's too late. The fork is gone. And now you have to U-turn. You can't U-turn for 100 miles. And you have to go, you're like, the gas station, you run out of gas on the way. So that's what happens in entrepreneurship. It's true. So you have to take a decision. I got to go left. Once you go left, like, oh, this is the wrong way, turn around, go back right, and now you're going the right way. You've learned. But people wait too long to sit on the sidelines, and sitting on the sidelines is the worst thing you can do as an entrepreneur. It's the worst thing you can do as a trader too. I mean, if you have a view on the market, put some money in there, and you will quickly be very, very in tune to feel the flow. If you're sitting on the sidelines, like, oh, I'm going to trade it, but let me sit on the sidelines and watch it. You're not. And that's actually where a lot of people do paper trading and stuff with not real money, which is good because you start feeling the flows of the market. You're in it. So you can sense it, okay, where people buying and selling. But if you're sitting on the outside, you never feel it. Same way if you're building a company, you have to be in it and making decisions to feel it.
That's a really interesting outlook, a really interesting piece that, yeah, I hadn't really thought about it that way. But if you see that fork in the road, trying to set your stop loss and make the right decision, it's better to do that than just not trade at all. Yeah, I really like that piece.
Yeah.
So kind of branching forward, you created these businesses, you sold your software, you were working with Goldman Sachs at one point. How did you get into DeFi? When did you start, or into crypto at all? When was that transition? When did you first, learn about it? When did you first get into it?
So, I mean, I'd gotten into I got into crypto years back and bought some Bitcoin and dabbled with it. But I don't think I was ever a true believer in it. And I mean, this goes back to what you're asking before, Bitcoin versus Ethereum. I mean, I think Bitcoin, the narrative keeps changing because it's unclear what it is. I would take a platform any day over a standalone token, right? Any day. And that goes to, again, I mean, every time I say something, I just want to say it. I'm taking action with my saying. Like the verse I'm looking is I'm building a platform, not a token. I'm not building a one-off project. So the same way that I'm saying that thing and how my view is, I'm reacting. So yes, Bitcoin has network effects and has that from stored value and so forth. But from Ethereum standpoint, you're going to want to build on top of it. So. And I actually just lost my train of thought on the question. Sorry, I went on a tangent.
No, you're good. So how did everything you're kind of doing branch into crypto? When was that initial interest in crypto and DeFi?
Wow, I really went on a tangent there. Okay. So I started trading Bitcoin, then I started getting into Ethereum, and then when DeFi came about, I started playing with it. And my first holy, whatever moment was when I started playing with Uniswap. And I'm like, they just created a market making thing that we do on Wallstreet with 1,000 people, and they just did it on software. That is genius. And I was so amazed. Like, I literally was turning to my girlfriend at the time. I was like, I was trying to explain to her, and she's like, I don't understand. Why is that a big deal? I'm like, okay, well, look, you have E-Trade, who's trying to, she was working at E-Trade at the time, and being the central thing where you're trading, and now you don't need E-Trade anymore. Each person can trade from their wallets, and you just have this concept in the middle that makes markets, but you have nobody in there and no system to manage it, and it just does it. And I was like fascinated. So that's when I got hooked, and I made some very good money at the time because I was a big believer in a lot of the early protocols. So I was early to most of them. And I was part of involved in it. I was getting part of the airdrop, so I got very lucky in terms of being early in the space. I never thought that I was going to necessarily be a builder, to be honest. I always thought I was going to be a trader in this space, and I was building other stuff. And I kept trading. I did well. I was getting, I would talk to people, and some projects I would advise on tokenomics. They're like, oh, you're a finance, would love to get your free. So I started getting involved in token. So it was like a slow pulling in, like, oh, tokenomics. And I'm like, I started then like, oh, look, that's, so the way I was able to think through that and me able to understand what makes sustainability versus not, what sounds like gibberish. A lot of stuff is gibberish out there in terms of tokenomics. And, it's funny. I do see a lot of projects that people get excited, especially the degens about it. And I'm just like, no, don't do that. Right. But you can't say that especially now I'm as founder of the space. I'm like, okay. But it's like focus on the fundamentals, people. Like, and like a lot of people try to do stuff that they don't even understand. Like they try to understand the math, and they're not math people. And they're like, oh, but I know, I'm going to get and dive into math. And I'm like, okay. Like, so I eventually by bleeding into this, and then I got rugged a few times. I said enough. I said I'm going to. Um, I think I can build something in this space to make this better. And I also saw in advising other protocols how much effort they were taking, how long it was taking, the delays associated with it, the frustration that was going with it. And even when you think you're doing it right and then having a contract not work, they had, I saw so many they were spending so much effort and time, and then they made one mistake. We've seen this where a contract is just, they don't have, they didn't implement something right in the contract, and it's over. The project's over. They just started. They had it so promising, and it's over because they made a fundamental flaw in that contract. And I just like, this can't be this way. Like, you're not going to have, you can't have successful industry where people are spending so much effort and time of their own. Then they have to get KYC, and then they think and audits, and then they get, at the end, they end up with nothing to show for it because it was just a software bug. All right. So I was like, there has to be a better way. So that was the impetus of Collectivverse. I said, if we can make it easier for project builders to build, and if we can make it safer for investors at the same time, so they know they're not going to get rugged, that's a multi-billion-dollar business. I mean, it's just that simple. I said this. I said, like, I said, look, I was going to say this, and I same to my voice. As smart as I think I am, I should say it that way. As smart as I think I am in terms of having insights in the space and so forth, I got burned as many times as everybody else, right? In terms of the getting money gets stolen, in terms of me believing in the founders, founding the community, or just missing on some things that I missed because I didn't understand the software, the underlying contract, right? So if I said to myself, I've been building technology and very hardcore technology for infrastructure, for finance. If I can't understand it from a finance and a software, and I'm a math guy too. I studied finance. I did derivatives, so I know the math very deep. I can't do this. How can the average Joe? How can I go and tell my friend when I'm having dinner, like, oh, should I trade in crypto? No, you shouldn't trade in crypto, because I can't. I'm also having struggles. I mean, and how am I going to tell you what to invest in? So what I wanted to do is, when I go have dinner with a friend, to be able to say, there's this ecosystem you can invest where I can assure you your money gets stolen. I can't guarantee you're going to make money, but I can tell you your money's not going to get stolen. So at least you can invest there. And they're curating good projects, and they're making it so that there's lower friction for these companies to go. So there's more money that are coming in or going to building something useful, as opposed to just churn in terms of years, right? And that's where when I put it in that very simple thing, this is where Collectivverse and the vision came. I initially was going to go about doing this myself. Oh, I want to say one more thing on this idea. I've also was talked to a lot of people, because I mentor a lot of entrepreneurs outside of crypto, right? I get to talk to them, and they're like, how do I use Web3? How can I use this NFT space or whatever? And they would all talk to me. And I realized that if I could create a platform that lets them, so for example, I knew an artist who has an NFT project, but they have no idea what DeFi is and how to create tokenomics and how to bolt on the financial side of it. So I said, if I could have artists come to Collectivverse and bolt on the DeFi and the financialization of that without having to know how that works, we now we make that artist empowered as a financial person, and right, they're not just an NFT now, which is going to do fine. It's now you can create utility and potential long-term value for that. Looking for a coffee shop. So, I mean, one of the things that I have access to is very deep level startups and people who respect at least who I am in the TradFi non-DeFi world. And by that, I mean like in startup world, right? I believe I'll be able to go to every accelerator and present Collectivverse and say, use this platform for all your building of your ecosystem projects. Whenever someone wants to build a blockchain product, use this, get up to speed faster, and we'll help make the investors that are involved secure, and they don't have to think about it and do it all from scratch. And I think we'll win that conversation over and over and over. So that's what I'm excited about. Going through the story, I was planning to launch Collectiveverse, which was actually not originally going to be called Collectiveverse, on my own. And then I met probably one of the smartest guys I met in a while, Hami Gendron, who had launched the number 2 crypto project, Crypto Titties, and was also one of the second NFT marketplace. And we sat over Art Basel one day. We were having drinks at this party event, and we just started talking. And he taught me so much. Like there was so much that he taught me, and I literally said to him, I go, Hami, I don't mean to sound like my ego, or whatever, but very rarely do I come out of a meeting like this and someone teaches me to this degree. Like I've never experienced that, and I think you need to be part of this. And he's like, well, look, part of my mission, and I actually had this, there was some space elements around it too. It's like part of my mission, something I've been wanting to work on for years, is to create a space metaverse element using the NFTs. And I wanted to have an educational element. I wanted to be something that we can go to universities and they could first understand the science part of this, so it's scientific and there's data that's real, but also that they can learn the tokenomics, they can learn building societies, they can do these things that students can now have a playground to. And I loved his vision. So we sort of merged it around where we took my ecosystem and wrapped it in a space metaverse. So that was the effect of what Collectiveverse became. And Collectiveverse stands for Collective Metaverse, where we want all the people who are part of it, project owners, investors, to be co-owners of it. So it's not just, hey, we're making all the money, thank you, and you own a piece of land, but you're actually a collective owner of it and sharing the full upside of our metaverse. And that was the idea and thinking of what we wanted to do.
Yeah, I think that embodies a big part of what DeFi allows for. It allows for something to be owned by a community versus, an individual company or something, without the use of stocks and that kind of thing. So I really think that's really cool. You're actually playing a role in the ecosystem. And I remember reading your white paper and I was like, okay, I was trying to piece together, where does the space element come into this whole side that we talked about this, the DEX, and I was like, okay, like it seems like there's so many different areas, but now that you explained how those two are integrated, it makes a lot more sense on why, you brought your vision, he brought his, and it was like a meshing of the two.
So let me tell you why I didn't feel like it was like, oh, we're adding another feature onto it that becomes just cumbersome. I said to myself, as good of a platform, anytime you build a company, you have to first focus on your first and foremost core focus. In this case, we're building the platform, the technology, and making DeFi and NFT space better. But you always need some vision of how you're going to continue driving growth and revenue. And every company out there has revenues that eventually slow down. Everyone. You'll eventually have this curve of you can't have this. I mean, when startups start, they have this growth curve that's like this, and then they'll eventually slow down. And when they slow down is when the market starts valuing it less. And you try to find, and then what startups are struggling with is to find the next S curve, the next accelerator that drives the revenue. And sometimes they do, and sometimes they don't. And if they don't, they fail. I mean, there's some companies that have been very lucky to keep going, like Google. They've just been a machine, but they haven't found a second business. I mean, they keep trying, but they haven't. So, Apple is the example. They did. They had their computer, and then they were dying. They were dead. They were basically ready. In fact, Dell made a joke that why don't you just sell the company and get done with it? And then they found the phone and the iPod or whatever, and they found their new curve. So it's very hard to do that. So I said, if we can tap into this metaverse gaming community and we can give ability for people to be part of that growth early on that are building, and they don't have to have a strategy around it. Because if I'm the one also thinking about how am I going to play in the space metaverse, every project is. And if I can give them a metaverse as a service in the same way, we're trying to build all these tools as a service, and give them metaverse as a service where they're able to start grow their treasury through our metaverse strategy today. It's not through today because we have this terraforming thing. So you're starting today. We wanted to start it sooner, but you're starting today where you're now able to let them grow their treasury. So it helps everybody. It doesn't just help. And then obviously it helps the local collectors. It helps the project. It helps the people who are invested in the project. Everybody starts to win. It creates a nice unified collective way where you can have the entire sea rise, the entire tide rise, as opposed to like being just like, oh, one project does well, one figured it out, one didn't. Like, how can we help every project in our ecosystem succeed? And this is something I think collectivers, I think we have the opportunity to do that you don't have in other protocols. In other protocols, it's a dog eat dog world. Ethereum, Avalanche, you're like, hey, build, and if it happens, great. If it doesn't, sorry. We are going to try to create an ecosystem where we want to bring in project founders and help them succeed. Like, it's almost like a studio model where, like, let's work with you, let's talk to you, and let's help you build successful businesses. And I'm working on, I mentioned this last time, with a CFI who does curated deals, and Collectiverse will be the first one. But then the idea is that every top quality project that comes to there will list it through these high net worth individuals and give those access to both those investors to high quality deals and the projects to high quality, long term investors.
Mm-hmm.
Ethereum, Polygon, and so forth, they don't do that today. You're sort of on your own. So I think there's a nice opportunity to create that kind of framework for projects to help them be more successful. I see other platforms doing it in a compelling way, but that's not like Obsidian Council. I think Obsidian does a very good job of that, and that's why we partner with them. That's why they're one of our partners, and we work. And I expect we're going to work more and more closely together over time. We always talk behind the scenes and how so many things we're working on tie in. So I'm excited about how those types of approaches to making the space better for builders, and then obviously for investors will play out. And I think Collectiverse, Obsidian Council from that kind of perspective, and then the products as a service platforms. I think that's the. I mean, if I was an investor and I wasn't building, that's what I would be looking to say. How could I get involved in those things? Because those are going to be what makes the DeFi NFT space viable in the long term. Everything else as a project, you're just being a degen, and that's fine. You have the right to do that. But if you really, really want to use your money for something that can both have long-term benefits to yourself and also help the ecosystem, I would be focus on those type of projects, because that's where you then can be proud, and you tell your kids one day, or tell your family one day, like, I helped those companies be successful. I was a seed investor, angel investor. Just like the people who say that for Uber now, they brag about it and say on LinkedIn, Uber investor, or Google investor, right? Everyone's so proud of it. So, you have your chance to. But if you're investing in some degen project and you're trying to get a 10x, you're not going to sit there and say, I invested in the 10x, 100x project. You'll make money, but you also lose a bunch of projects too. Yeah, I'm rambling. Sorry.
No, you're good. You're good. I really like the points that you're making, and finding those projects that are actually trying to create this infrastructure for a more successful crypto space, I think is really key, because we're not at a point where the infrastructure can support volume of everyone in the world transacting on it. Like you see in a bull run, when only a small percentage of people are already trading, you're having transaction cost, at least on Ethereum, you're having transaction cost of $350, $400, and it's like, that is by no, like, if you're trying to invest $10, you can't. So it doesn't make sense. So this infrastructure is huge, and I like the fact that you're talking about the metaverse and all that kind of stuff. Even if you're looking at getting into a metaverse, like something that's more focused on the product, like if you look at the early 2000 games, right? No one's going to play them because the tech is just so far behind. But if you look at different engines that were created, and they've been updated since then, you look at like Unreal Engine, they just had their Unreal Engine 5, I believe. Like, that's going to be a successful company because they're bringing new tech and kind of updating as this infrastructure to build on top of. So I really, really like that point. I really like that, resonates really well with me, and I think a lot of people need to pay more attention to those long-term plays than in the short term.
Yeah. I mean, that's where my money's going. I'm looking at platforms that I think could be the future, because and that's what the VCs are doing, right? Mm-hmm. If you want to emulate what the VCs are doing and how they make their massive money, they're not looking at the token that's going to just go up 5x or 10x and has such cool tokenomics. They're not investing in tokenomics. They're investing in platforms that they think are products or services that are going to make this space better. And if you want to be a great trader, which is what you get in Web3, that's the beautiful thing in Web3. Like, you would not see this deal. If Collectiverse was a Web2 company, you wouldn't see this. It'd be only accessible to very few people that knew us in a friends and family round, and then the VCs. Once we got some angel money from friends and family, just like I did with some of my previous companies. You didn't see those previous companies, right? The reason is because it doesn't have this open community feel, and so this is the one opportunity where you have a chance to see some of the best projects that are out there,
Mm-hmm.
and participate as a community member early. And I love it. That's what I do as an investor. I mean, that's what I'm looking to invest now. I hold on to the products that I use and I believe in. That's it. Those are the ones that I use, not just the ones that I believe I think that the token's going to 10x because of tokenomics. Tokenomics is an interesting thing. Tokenomics works is how do I say this? Tokenomics works until it doesn't. Does that make sense?
I think we've seen that with DeFi so far.
Right, exactly, right? Tokenomics work. If anybody says the tokenomics, I'll go with these discords and I'll read them like, oh yeah, these tokenomics, this stock's never going to go down. This token's never going down. I'm like, okay. And I keep my mouth shut. I look at them. So look, none of these tokenomics are going to drive the price. What drives the price long term is substance. It's the value that protocol can create from building a real business. And if you don't know, if those founders don't know how to tell you how they're going to build a real business that's unique and differentiated and can generate long-term revenue, then you need to be using your funds elsewhere where someone can, because you have those many opportunities here. It's beautiful. You have so many projects and so many opportunities. 90+%, I don't want to put the exact number, don't know how to. They talk about their token and their price. I mean, I was sitting in a mentor call in a totally non-crypto call about someone who wants to do something in the agricultural space the other day, and they're talking about their token, and they're saying the token's going to go up. It's not going to go down. I'm like, yeah, really? Tell me why. And they couldn't tell me why. I could tell me the math behind it, why you think, or tell me why sustainably it can continue, and they couldn't. And I explained to them, like, look, unless you build a business underlying fundamentals of the business, that token is going to either be a pump and dump, or it's going to it's going to flatline and go nowhere, because you just have no fun. You have to build the fundamentals around it to have that revenue engine kick in. So I always like to see the projects that have real businesses associated with it that are different.
Yeah, I think that's the most important piece. Like, people a lot of the times, talk about, even if they are citing, whether it be the math of the actual tokenomics themselves, that doesn't have anything to do with the sustainability of money coming in. Like, that inflow is super important. Those revenue sources are extremely important, because really it doesn't matter if the supply goes down, or if the demand goes down, the price goes down with it. It's just basic supply and demand. So you have to always look back to that. If for some reason the hype starts to go down, whether we have a really severe recession, or whether it be, where people literally can't invest, or it be something totally different, the hype is always going to end at some point. And at that point, you're going to have a lot of these tokens starting to struggle because they don't have a product that they're offering. They don't have a service that they're offering. There really isn't anything behind it. So those are some really good points.
And the other thing is around when things are where they're going to just solely count on buybacks and burns. Okay, that's going to work. I mean, look, I also think that can work in the short term. And I mean, of course, if you're going to buy back, I mean, if I think a stock is going to have significant amount of buybacks and or whatever, and retire the stock, I'll buy that too. I mean, it's the same trade. It's not rocket science here. But eventually, you're not going to keep having an unlimited treasure there. You're going to have to figure out how to earn enough money, because at some point you're going to have to. It has to be some fundamental reason that they can continue doing that, and it's not going to be this magic engine of money. I mean, if you think there's a magic engine of money, I have some great land to sell you in the middle of the Atlantic Ocean. I would love to talk to you now. Go back to real estate. So, there's no magic of money that's going to keep the buybacks going. And And I've had these conversations with some founders, like what is, I try to have it over and over, like, okay, great, I love it. You should have some, have some buying, natural buying pressure. And if you want to reduce the flow, great. Those are fundamental financial tools. Great. But that's not your business. Like, can you imagine if I launched a stock company, a company and went public and they said, what's your business? My company is I'm going to buy back my stock and I'm going to continue retiring it. And it's going to go up. That's my company. Like, wait, what is your operating? No, I don't have any operating. My operating is that I'm going to get investors. They're going to buy my stock. I'm going to keep selling the thing. And I'm going to have money to buy it back. And it's going to go up. And that's it. And that's what people are. I mean, when I say that, it sounds so ridiculous, but that's what people are saying in the tokenomics of these papers. I read it and I'm like, we're going to buy it back. That's how we have a special engine that's going to buy it. Okay. Okay. I'm going to launch. Yeah. I have a public company I want you to buy into.
Yeah, it's not sustainable long term. It could work for some time, but once that treasury, like you point out, is out, there aren't any funds to buy that token back. So it's a very, very good caveat that I don't think new investors into crypto really understand. And I think that's, at Cardinal House here, we're trying to really bring education to people coming into crypto from starting off, whether you're starting off with stocks, real estate, or nothing at all. You're 15 years old and you want to learn about what you could do in a couple of years. That's really, because Web3 is going to be integrated into every business in the next 20 years. And just like the internet is integrated now, like you don't see businesses that aren't integrated. If they are, they're in an extremely rural part of the country or extremely rural place where they don't have access, like literally don't have access. But
yeah. No, it will be part of it. We won't call it Web3. We won't call it blockchain. We won't call it DeFi. We probably won't even call it NFTs by that time. We'll just say it works. Just like I don't sit there and say, hey, look at me, Mom, I'm using my mobile phone now. Or hey, look at I have a call on the internet right now. Hold on, I'll be right back. Like, we don't say that. It's just like, you're using the application. And I think that's where I go back to. Right now, we talk about the technology. I have people come to me and say, I'm interested in building a business. How can I use NFTs and DeFi? And I'm like, take a step back, please. What are you trying to do? And let me let you know if NFTs and DeFi can work for you. People want to put the NFTs and DeFi first. Like, I think you can use the NFTs for this and that. I'm like, stop. What is the goal you're trying to achieve? Let me see if this technology is right for you. Okay, now this is the goal you're trying to achieve. Let's see now if using this, are you open to using this technology and having these capabilities? And are you open to the risk that these technologies introduce, right? So nothing is a free lunch, right? So you understand. You want to understand everything. So that's what I'm doing. I mean, I see myself once I build Collectivverse, I think I'll have a really cool opportunity. And that's actually why I doxed and why I'm out there and why I'm happy to do this and I'm going to keep doing it. This is like my 30th talk or call this week. I did a meetup and did a presentation. I'm just going to keep going. I'm not going to stop. I think I can be a good conduit to help founders to understand what it takes to come to this space and bring them into this space. I can help people who might not be thinking about it, but saying that is a business you can bring to this space, and trying to help that process. But I can't do that in the current way, the structure of the current current blockchain world, the current DeFi world. I would not tell my brother to come into this space as it is today, right? I just wouldn't. So my hope is once we build Collectivverse the way, at least to the point where it's far enough where I can then say, here, come in here, and this is how you can use it, and we can help you do this, and we're gonna be able to do it with minimal cost, minimal effort, and we'll get you going, and it's gonna make your business better, or it's gonna do something that you didn't even think of. You financialize something that you didn't even consider. I have examples of financializing the coffee or financializing memberships, creating the beautiful thing around, for example, right now, loyalty points, they are, for an airline, when you take miles and so forth, they are a liability. So let's talk about the financial balance sheet, right? I'm going to just sort of go into that. They're a liability for any airline. So in the hotel, they sit if you go to the balance sheet, you'll look at These are they sit on the as something they owe to you as a customer. So it actually hurts the company's value. But what if you now tokenize it, and now they can own a stake of those tokens, and then if you can buy some of those tokens that give you utility to have those same points, and if people start buying them up and they go up in price because you own someone on the asset side of the balance sheet, your value of those points go up, and you have no liability because the tokens, so you've now turned what was a full 100% liability into a potential asset, and you've achieved the same benefit. Right? So there's an example of financializing rewards points that any business can leverage day one. That's not being done today, but it's too hard to be done today. So I want to create. I want someone to come into Collectiveverse and say, I want to create the rewards protocol for anybody to use and help as a bolt on, and it just works. And then they benefit from it, and the project benefits it, and Collectiveverse benefits from it. I want someone to create the NFT membership protocol that different project, or they can do it for a specific project. I'm saying, like, I want to have people think about creating those platforms. I also, I talked to a founder about this yesterday. An hour and a half call with him, and he's like, he wrote me today. He's like, this is the most exciting conversation I had. But it's like, he has this idea, and I'm like, why don't you do franchising on chain? It doesn't exist today. I mean, one of my interesting thing is franchising is so expensive and hard in the real world. It takes hundreds of $1,000s to be legal and so forth. Well, imagine now you can create franchises through NFT ownership, and then they can each one can fractionalize it, and now you let them sell it, and they own the business on that, and now you create a conduit to create businesses. Like, now you created through NFTs and fractionalization a franchise business for anything. Like, now you can sell regional. So you have a product, and now you can sell it across different regions. You can just do so many powerful things. But there's one is to actually use the franchising tool. Franchising is a legal and financialization framework, and I'm saying bring that on chain. No one's done that. Why? Why isn't every model as a service out there? Why? Like, I mean, I'm just looking around and saying there's so many low-hanging fruit that we can build, but that's what I want built in Collectiveverse. That's what I want to bring. I have so many ideas. I mean, if founders come to me, I can give them ideas to build or businesses. I want to make. I mean, I can keep going for hours and hours on ideas, but I don't want to bore everybody on a Saturday. But there's so many business opportunities for people to make. I believe a generational wealth and do something very important that's important for other businesses and people.
Yeah. We're at a point where if you can't think of ideas in this space, you either need to go educate yourself on, what the possibilities of it are, or probably don't look into being an entrepreneur, because there are plenty of options that you can take. And it's funny that you bring up the whole reward points as a service, because that is something we've talked about in the past couple of weeks with some software that we've been developing. Yeah, so that's really cool, actually.
Okay, cool.
I want to be respectful of your time, so I have. Yeah, perfect. Yeah, well, I'm sure we'll be in more talk soon, because I got some things extra questions about Collectiveverse I wanted to bring up. But one last question that is a little bit more geared towards DeFi is doxed or undoxed. So what do you think is the kind of what should be the standard currently, and where do you think we're headed?
So that's a tricky question. I had that same decision to make, and I in the end we decided putting our face out there, being able to meet with people in person and create business deals was very important, and we can't be hiding behind an avatar. So I sort of went. I'm pseudonymous in some ways. Like I try to push more to the Apollo than Kul Singh name. I mean, you put my name out there, which I have no problem with. You saw on the white paper, my name is out there. But I want to build Apollo and my name from Collectiveverse as someone who has who's someone who has some say and substance, and is not just hyping up, and can value space. So that's my goal. But I understand, especially in a world where wallets can be at risk, or people might be going after people, or some other attacks, that there might be some interest to stay private. And I understand that. I also think it's tricky, though, if you're investing in a project that the founder is not publicly doxxed, that you just have to fully trust that the KYC group is going to dox them or do what they can if they do something wrong,
Mm-hmm.
and that's your own decision as an investor. You have to make that decision on a personal basis. I've invested in projects where they were KYC that I trust but not doxed. So if I was to take my own actions, I've done both. Um, I just think it's a tricky situation because not everybody wants to put their face out there. Not
Mm-hmm.
everybody feels as confident to, go out there and speak, and like out there, they feel much more comfortable by being an avatar, and I'm okay with that. Like I don't have any issue. I think I think the future, we're going to be much more
Mm-hmm.
undocs as we get in the metaverse, right? We're all going to be by our avatar. So the avatar is going to be a very powerful tool. So if I was to sit there and say, oh, we have to all be docs, and I think I would be failing to see where we're going in the direction of this. I just think we need to have more teeth in the KYC systems. I mean, I think Obsidian has done a good job. I've liked what they did with Village and a few others. I talk with Stud over at Universal a lot. I like what he's done for them, and he's done some really good things about helping with security. So shout out to those guys and what they've done. So I like what some. If you can assure those teeth in the KYC process, I don't think it makes a difference.
Fair enough. Fair enough. And that's a really good point, actually. It definitely something that I'll keep in mind when trying to think about that a little bit more, because that you made a good point that's where things are, seem to be heading. So, and if Collectiverse is successful in, what you guys are trying to achieve, it probably won't mean as much anyways, because
That's my goal. That's my goal.
yeah.
I want to give project founders the ability to build. Like I don't mind if someone wants to go and do a side gig and not have to worry that everybody knows that they're doing it. They have a real-time job and they're afraid that people are going to find out, right? Or they might have some regulational things that they're worried about in their country. I don't want them to have to worry about that. So that's what I'm doing. Like, I want to
Yeah.
put this out there so we can let them avoid it. So this is
Yeah.
so you can consider, we call it DeFi and NFT as a service. We are doxing as a service. So we're letting you
Yeah.
not doxing as a service. So
Yeah.
there you go.
KYC as a service,
No,
essentially.
we're KYC. Right. We're basically letting you be private so that you can stand behind the Collectiverse name that we're going to keep you secure.
Yeah. Awesome. And then closing question.
Yeah.
If you had $1,000 and one to anywhere between 1 and 10,000, so not a very significant amount of money, and you had to go restart from scratch or give advice to yourself back when you were, 18, 19, 20, what would you tell yourself?
I mean, if I knew what I knew now, obviously I would have bought a few stocks that I knew were,
Unrelated to investing.
Right, investing. Look, I'm not a programmer, and that is something I sometimes wish I was. I go very deep into tech. I'm usually I'm like a product architect, but I always need a CTO to tell me you can't do that or can't. Sometimes I wish, but it's not something that I felt like, okay, now I'm going to go back and do that, because I think what I can do most developers can't do, which is I can communicate and I can visualize. A lot of times they get so much in the weeds they can't see the big picture, so I can do that very well. But I wish I had the deep fundamental understanding of the technology, to the point that I wouldn't have to ask someone to know that. And this goes to first principles thinking, understanding, to just, as Peter Thiel will say, or Elon Musk will say, like, ask the question 5 times, and if you don't know the answer, go and figure it out. Well, a lot of times, most of us don't. And I'll be the first one to say, a lot of times I don't. And sometimes technically I won't know the full answer. I'll have to go and ask other folks about that. I would rather, and this is something Elon does very well. He's very good about diving into this rocket books and so forth. But I found that if I did that, then I would lose the ability to focus on what I am good at. So I stay focused there. But if I had more time back then, I would have focused much more deeply in understanding technology. I studied finance. I didn't study computer science. I would have done much more. And I think if anybody can get into that now, if they're young enough or they have the time, spend some time on it. Everybody can be a builder in some way, especially if you're in the Web3 side. It's great. So I don't know if that's the answer you were looking for, but I do think knowledge is definitely very powerful. And there's I'm the first to admit, like I hate it when I don't know fully something deep enough, and I will I always will have to ask someone and trust the people that I'm trusting, right? And I don't. I wish I didn't have to, but I guess you're never going to know everything. But again, there's a lot of stuff that I feel like I do know, and I read a lot, and I study a lot, and I go probably deeper than the average person will go into things, and I'd like to think I'm thoughtful about most things. You can tell me if that's the case or not, but there's points where I'd like to go deeper, which I can't at this point.
Yeah, you have your share of niches that you're kind of focusing in on, and I think that's important too when you're running a business. You have to have those, just like any business, like you mentioned, you have to have that kind of niche that you're focusing on, and then you can expand from there. You brought your visions together, similar to that, but yeah, it's a good point.
I mean, I do think I bring something pretty unique to this space in some way. That my deep understanding of financial engineering and the financial this thing, and then also building technology in the financial services space, and combining that and bringing that experience to the DeFi space, I think is pretty unique. There's very few people in the space who can 10-year blockchain person, right? There's just, they did that, and they're BSing you, right? Because they haven't. Ethereum hasn't been around that long at this point, right? So what I think I bring is a deep understanding of how to build software businesses, and understanding the financial engineering and combining that in a unique way that I think fits very well with what Collectiverse is doing. And I think a lot of times VCs will say founder market fit, founder product fit. I think you couldn't find a better fit from my perspective. And that was one day where I turned to my wife and I said, I should be in the space. I think I can kill it here to help the space be better, but also just given what I know, I think my understanding to the depth that I have, it's just you can tell most people they can't, because they didn't live, just like wasn't a developer, and I spent years studying finance, and I studied years spending on Wall Street. Unless you're doing it, you're not going to. And I spent years building a business and taking the lumps, and understanding how to integrate into the biggest Wall Street firms and hedge funds, and how to manage it. So when you do that, you learn. If you don't learn, shame on you. But
yeah. No, I love it. I love it. And again, I don't want to take up too much of your time, but thank you so much for coming on. It's been a really great hour 20. It's a lot of information.
Yes,
I'd love to have you on again, and I'm sure we'll bring Collectiverse on for more AMAs to talk about, new updates and all that kind of thing.
Awesome, Chris. Thank you. Thank you for everybody. Whoever's listening in here, say hello. Say you came from this podcast. We'll get you a WL for spending a Saturday afternoon listening to me about myself. This was not about a Collectiverse thing, so I appreciate you listening to my story, and say hello. If you can share the link, Chris, appreciate that.
Yes, I will drop that in here right now. Go ahead, join it, and then say hi in their chat.
And I would say if anybody's listening or anybody's participating here, if you're interested in building, or if you ever even considered it, or you never consider it, come in, talk. Let's just have this conversation. Jump in the general channel and let's discuss. And if you're looking to invest, obviously that's another side of the story we can talk. But I want to let's open the conversation up, and let's see how we can turn more people who never considered being a builder in this space become. And I'm one of those. I admitted that already, that I never came to the space as I'm going to come and be a builder in the space. I came as just like you, and look at me now. So I mean, I'm not. I can't say that I'm successful yet in terms of this, but I think at least I think we're on the right path.
Yeah, I love it. I love it. I'm very excited for everything coming up. So we'll talk to you again soon, but thank you again so much. And I really appreciate you taking your Saturday as well to come and talk to us.
Thank you.
Have a good
Appreciate
one.
it. You too. Take care. Bye-bye.